Good evening. This is Fari Hemzi. It's about 4:40 p.m. March 1st, 2023. Welcome. Uh, it's our nth, whatever. PMT webinar, proactive market timing. We also put in a lot of updates for our overall what we do. So we encourage all members to take a look at it. It's recorded. If you miss it, it's okay. It'll go to our video mode, and after this is done, post-processed by go to meeting and then post it here, which is our YouTube channel. Best is to subscribe it. We have about 1,600 subscribers there. And the moment we post something, you get a record of it. Okay, thanks. Yeah, we do get a couple of comments there, but I usually don't respond. Yeah. Everybody's trying to pick up some traffic off of you. So thanks, Dennis. How are you? Dennis, I haven't picked a game yet, but I'm close. Okay, so maybe today or tomorrow I can pick a day we can go to watch Red Sox. Okay, and it's my treat. We had a great time last time. Another friend of mine is going to join us. It'll be three of us. Okay, I don't know where Crudell is. Crudell is probably selling some prosciutto to somebody. Okay, yeah, so he's not trading, so he must be selling some fine Italian ham somewhere. So. But I would have invited him too, but I haven't heard from him in years. So hopefully he's good. I do see his webinars. So okay, quick housekeeping. I feel much better. My vitals are normal. The only vital that's a problem is our emails. We have to reinstall the spam filter because we have to reinstall Outlook, and we have, as you know, retention policy you have in a financial services company, and it's just our files are huge. And then whatever we did may have been wrong with the spam reader, which is actually a Russian soft code, which is very good. We've used it for years and years. I probably installed it in a rash time. It's a little bit too fast. Maybe I was in a rush and not pay attention. It tagged everything that we have. Like it shows like actually not everything, quite a bit of it. It shows like 11,000 unread messages. There's no way in 2 weeks we get 11,000. So something else is wrong. We'll get to it. My request is don't wait for that. If there's something that you requested from us in the last 2 weeks, okay, last 2 weeks, that's when we got into trouble with OneDrive. And remember, TradeStation and OneDrive do not match. Okay, so if you're running something like a TradeStation or even Interactive, and you have OneDrive, you are asking for it. It's a Russian roulette you're playing. Okay, why? Because it's trying to save to the cloud instantly. You can't compete with your trades like that. You can't run a hedge fund like that. Okay, so it happened to 2 of our machines. We had to reset both. And the problem is the new policy at TradeStation that says that you need OneDrive. That should not be the way they operate. They should ask us. Like a Dropbox, you can set up when you want Dropbox to back you up, or sync. This is the time it wants, or you can turn on and off, but no time. It says every 2 hours, 4 hours, 8 hours. What if you forget one morning? It's good. So I wrote into them. I asked them, please, give us a facility. Now that we have no choice, at least give us a facility to say, for example, 2 hours in a day will resync. Okay, but you cannot have it resyncing during the day. So that's a PSA, public service announcement to you guys saying, go make sure your OneDrive is not running full time. This started with a policy in October 2020. I read about it in MSDN, Microsoft Developer Network, which is a subscription-based high-end for big-time programmers. It's not cheap. But embedded there, it explains how this is done. Just like any other major company, they just don't have time to write emails to us. And if they're rolling it over, the documentation says soon we'll be caught up with everybody. But imagine what their install base is. How many billions of PCs we have out there? Yeah. It's got to get to everybody. It has nothing to do with individual persons using it. It has to do with the number of machines you have. I have 7 here. So, not everybody's got that. Most people have 1 or 2, whatever. 3, whatever. But it's got to get to all of them. They're rolling it over to be all having OneDrive. So, and the way you look at it is very simple. And let me show that because a lot of our folks, this I communicate with them, and I'm very audio visual, so there's no ambiguity. You can't have ambiguity in the Navy when you go to launch mode, right? You insert your missile key, and you gotta know what the instructions are from NCA, and you have to execute that instructions. So go to apps, go to install apps, and say OneDrive. By saying one is enough. See that? Now it's running. Now, this was not there a month ago. Newly has come in, created havoc, and we have to recreate it, and now tame it because there's an option here. You go in there, down here, you get an option. Where is this here? No, actually, I've turned that off in the intraday. Yeah. That brings it up and says syncing, boss syncing. And one of our guys in the chat room helped me with that Peter Cook. So, anyhow, we have 11,000 emails. We're going to get to it. That's unread. That's not exactly true, but that's how the spam reader tagged it. We'll get to it. In the meantime, if you have anything that's crucial, that we have found a few and responded to for the last 2 weeks, but if anything we have not responded to, we apologize. Please send us a reminder. Put in a subject line, resending, RESENDING, and we'll ask staff it quickly. Get it to the right person, or it has to be me. I'll take care of it. That's one. Two, we are working on version 4.9 on our ORB, our flagship product, and the latest sub-release is 1.0502. That's just the really logic stuff in there. There is no code change. Now, we do have one candidate for code change. There's a little bit of logic. It has to do with follow through. I'm going to leave it at that. Why? It's subject to some back testing, and I'm putting two key guys on that to look at it, aside from just my own view of things. And we probably won't be there until about Monday. Probably over the weekend we'll have a conclusion. If the conclusion is positive, then we will be prepared to issue version 4.90 sub update 1.06. Okay, because right now we're running. Here's what we're running. You see what we're running. 1.0502. This would be a good change. There's going to be a major, semi-major change. Okay, big change, I would say, not major, but big. Would be 106. Okay. Yeah. While that's all going on, feverishly, we're at a fight for getting to 5.0. At least getting the alpha version of 5.0. It was supposed to be here on 21st. Okay, that was that was right. That's about a week ago, right? And it's not here. Yeah, 21st of February. Okay, week after what do you call it? Valentine's Day. It's not here. Today's a week late now, and it's not here. We're looking at possibly over the weekend, maybe, or next week this time to be ready, just for alpha testing. It won't be available on the chat room yet. It won't be available for any back testing. As a matter of fact, it doesn't have a back test feature because it's a totally different animal. We're getting totally away from API of TradeStation because they under pressure when you're trading size, it's not working. That's the problem. We're victim of our own success. So we have to go this route, and it's going to take us time and expensive. I'm holding on the prices, don't want the prices to rise. The inflation has done damage to all of us enough. No need for these prices to go up, but we've got to catch it properly and go forward. Now, of course, if to go back to the success they used to have, then the market is paying for it anyway. So it'll be all right. My other choice is to do nothing. I can't do that. I'm semi-pregnant. My name is on the door, and I'm not going to leave it like this. So that's our goal on the ORB. We're flat on options. We had one FCX. We took care of that. Nancy's back. She's actually in the chat room here with us. We welcome her back. And what a hero. She had a guts. She had to make a gutsy decision, and she did it, and she's good and awesome. Cash is not in town. He's out of town. Peter has been very busy in the chat room, holding down the fort while I was so sick with rhinovirus. 2 weeks now. And of course, Marcus Bozito is Marcus Anthony, You read about him, right? So Marcus Anthony. So he's good. All right, let's move on. On PMT, we went flat. We have not changed our bias, as discussed last week. We kept on, let me say one more comment. We keep on getting comments from people saying, what's your position? The position's in the emails. If you're live with us, you get that. When you see a chart, you may be behind. Well, if you're with us, you're going to get the chart in real time. So we don't go out there and serve people who are not members. No, we have no allegiance to them. Our allegiance is to our members. And you get it there. Now, if you miss an email, I can understand and say, hey, listen, why is the web page is not updated? Well, we got behind. Sorry. You have no idea how overwhelmed we are because of the number of people. The problem is let me tell you what the problem is. You want to know the problem? Let me give you the problem. Here's the problem. Oh, what happened here? Why are we on a posting here? All right, so we have an issue there. Interesting. All right, let me go here. Does that give me the same problem? Okay, so we have some sort of issue there. All right, let me go here. Let me log in. I think I know they changed their. Yeah. Okay. All right. They changed their ACL. I'll fix that. Hold on 1 second. Bear with me. Let me fix the ACL. ACL is sharing. Yeah, let me go here. Yeah, the ACLs are share. Yeah, there we go. Full control. No, we want. No, read. There we go. Yes. So change applies. Okay. Boom. Okay. Let me go. So now we should be okay. That's a good test. There we go. This is our problem right there. Okay. All-time high. Well, the market's dropped. So now we're flat here. So people, this I got to be updated. I haven't done it. But as of this moment, that was correct. Okay. So the question is, what are we doing? Well, when you remember, you would know. Sorry. I usually post it. I usually share it. But please do not bug me to see where we are, what are we doing, and so forth. Because if you're a member, you get the emails. Okay. So why I'm doing this? Because I'm trying to catch up. We're behind. Why are we adding more staff? Because it's time to train the staff. It's not easy. We're not selling soup here or burgers. It takes a while to get the right person, train him, and a lot of times, along the way, you find out they're not the right person. Yeah, so not easy. And so here we are. If we're a little bit behind, we're a little bit behind. I'm sure there are other places you can go that are not that behind. But it's a function of how busy you are and how why are you behind. So part of this was because I got very sick and I got behind. So I'm trying to catch up. My apologies, not intended for any particular purpose, but that's where we are. All right. So let's start the webinar. The meat of the webinar, which is going over econ calendar and going to charts. Thank you again for coming in a little bit early, about 4:30, about half an hour early. I think I want to be on that schedule if we can. And we'll go and change the date, the time, I'm saying. Not the date, the time. Wednesdays at 4:30 for the future calendar, future events. Okay. Wednesday, very slow day for ORB. We didn't do much. I'm going to get to a chart. Big days are usually Mondays and Fridays. That's how it usually works out early in the day. This week, it was slow. Last week, Monday was, actually Tuesday of last week was good. Because last week we didn't have a Monday. It was holiday. Tuesday was a good day for me. Today was a small loss and I stopped. The data, well, look at the charts. The rates are edging up a tad. We have a little bit of conflicting data. There's a lot of rumors, and I think some correlations have broken. So you get a lot of erratic intraday moves. None of it makes sense. you scratch your head. My advice is to step back. I've said it to ORB people, listen, guys, if the shake is too much, it's not your fault or the machine fault. We're in an unusual intraday volatility regime. When I don't get something, I step back. You don't have to trade every day. As Admiral says, every day at 8:30 Chicago time, they ring the bell. That means there's another market at that time. So if you have to trade the day, that means you're a gambler, and that's a wrong attitude. You're going to get burned. It's just a matter of time. So don't do that. I've done it myself. When I pushed it and I got burnt, and you learn, you come back. So today I lost a few bucks. I was ahead a little bit, gave it back a little bit, came back a little bit. It's still finishing negative, but I had other errands I had to take, and I usually try to do it on Wednesdays. I did, and so I'm happy. No problem. Tomorrow's another day and another battle. You got to keep your ammo dry. You got to be able to go back in psychologically and monetary wise. So you can't mess up your brain or your account. It's and, not or. So keep that in mind. What was it? The construction spending was up, I believe. Hold on, let's see. Today, a couple of stuff was worth noting. Again, come on, what is this? There we go. You gotta realize, rhinovirus, your blood oxygen drops. So some things it's easy to forget. Yeah, when you had that. So I gotta go back to charts to take a look. 0.4 can be -7, revised down for the month of December. So we're reporting January right now. Consensus was 0.24 January, came -0.21. So a little bit on the downside. I think this should be good for the Fed, but we'll see. I think also, didn't we yesterday? We had, was it yesterday? What was it that we had? Richmond Fed. Yeah, this one was a surprise. Richmond Fed was a surprise, which is kind of not Philly, is below that. But look what happened there. Okay, prior was 11, -5, came in -16. Complete out of range, yeah. But this is southeast area, basically, in terms of manufacturing. Not good, okay? Tomorrow we have jobless claims. I don't care about motor vehicles. I'm surprised we don't have non-farm. Must be because we had the short. We didn't have 5 weeks. We had 4 weeks maybe on February, and so it's going to be a report next Friday. I thought it was non-farm. Oh well. Both of these are crucial, especially ISM services. Those are in line. There's nothing unusual there. Yeah. So still, we're getting some guidance down on the earnings, and that's the CYA by the CFOs. Post Dodd-Frank, they're starting with blood. You just gotta keep remember. So a little bit of their negativity is warranted, but I think they seem to overdoing it. We have productivity costs tomorrow at 8:30. That should be a number that the Fed will look at. We should pay attention to that. 3%, 2.5%. Range is 1.6 to 3. We'll see how that comes in. This should be positive to the technology. Okay. Again, I'm just getting surprised here that we don't have non-farm tomorrow. Now, Bostic is speaking. Kashkari is speaking. Bostic is out of Atlanta. Kashkari, of course, the big dove out of Minneapolis. He's talking today and tomorrow. Okay, interesting. Okay, hold on 1 second. Goldspeed just took over Chicago Fed, replacing Charlie Evans, the big dove. Chris Whaler is a board member. That's tomorrow at 4 p.m. Okay. I don't know what Kashkari is talking so much for. I have no idea. Michelle Bowman is a board member. Yeah. And Barkin is Richmond. So you got a bunch of data coming in. So definitely we don't have non-farm. Yeah. They won't be talking when there's non-farm. Oh, Again, I don't know who Logan is. I gotta research that. That's new to me. Okay. So that's a bunch of fat heads talking this week. NFP's next week. Hey, thanks, Ted. I'm going to take a look, Ted. We're going to get to 10 years. Sure. Appreciate that. Thank you for attending, sir. NFP is next week. Gotcha. Okay. Let's go to charts. Again, this being recorded. Last recording had a huge hit because of number who viewed it in like a first 48 hours. And so we're going to keep on doing this. Okay. As we discussed before, it's in that memory could see, my goal was to see 50 bar. And we took off the following day. I believe that day we went off flat. I forget. I don't know. Thinking, I forgot what I did. This one. I think it's that one, whatever. Hold on. Let me go to my page where I keep track of things. Hold on. Okay. Oh, come on. Where is it? Okay, it's not coming up. I don't know why. Okay. Huh? Okay. We have a page that we keep track of this. Okay. Oh, there we go. Okay. We went flat at 31.91. There we go. 31.91. Okay. At 223. Okay. And it was another 79. If you actually go back, you see this? We lost 16 handles. After that, from this 1st of February of last year, we have, because that's the 1st of February. That's the result from prior, yeah. From 1st of February, even 2nd, whatever you want to do, you could see what we have done. Just absolutely killing it. Okay. And that's where we are. But at 222, we have gone flat. So I don't know if the picture is not updated. I've got to find out why. Now, part of it is because we put the, what do you call it, back. Maybe, hold on. Let me say something. We did, let me clear this guy. Sorry. Remember, this is not this is 210. No. 210. No, hold on. 222, yeah. And that's the last, okay. Oh, so I forgot to change this. Yeah. We went, hold on. What is this? Hold on one second. That's our last picture there. Let me go here. On 222, yeah, okay. I see. In the morning, that was correct. We closed at the end of the day. They got assigned exact number. That's how mark to market. I don't keep track of pennies that I know is a mark to market. That says MTM. But flat at the end of the day, that was a fill. Okay, gotcha. Okay, so in that chart, I should have said if it was after the close, we would say flat. Okay, from that day, 22nd of January. So, why did we do that? Because we want to keep an eye also on Time and Digest. What's going on with Time and Digest? They send our emails back and say it's recorded. Are they keeping track of anything? I have no idea. I don't know. I haven't heard from them since the last issue, which was the issue I was declared Timer of the Decade. Is the day Biden came in. So January 21st, 2021, or January 20th, 2021, whatever that day was. Yeah. So that's what we have. I have no clue, Ted. If I knew, I wouldn't be here. But I can give you some clues. How's that? He's asking me if SPX trades down, where's support? We can discuss support, all right? Yeah. All right, let's go to the charts. Well, what we talked about we can go, and also a week prior to that to watch for 200 day. Well, you can put a banner up and say mission accomplished. We touched it almost here on the 24th. Okay. Yeah. Well, that's right. We covered on the end of 22nd. Okay. Yeah. We covered here which is 3991.05. Yes. Now, for us to touch that, that's what we talked about in the chat room. Correct. For us to touch the 200 bar, which is we hit it on the 24th and we hit it today. Wait a second. That's not today. Hold on. Where's today? Yeah, there we go. Sorry. Today, there we go. A little bit lower. Yeah. We would have sat through a massive up and down against us while we're short. So, in retrospect, if you're trading the option package, option part of it, that timing was pretty decent. Okay. Not ideal, but didn't get exactly to our number. But it, in terms of the theta that will kill you, I think we did the right thing. All right. Now it's hit that twice. 200 bar is a key support. We don't hold this. We got a lot lower to go. Depends who you talk to, Ted. Marko Klonovich, head of JPM Quant Shop, says 3,600 plus or minus. He was looking at 10% when we were at 4,000. Okay. Let's go further in the charts here. We'll take a look and see if that's got any chance or not. Okay. I'm not saying Klonovich is wrong. A lot of time he's right, with the exception of 2015, which I beat his ass. But that's not pretty sure. I was ahead about 10 days ahead of him. But over a long period of time, it's very good. It's very smart guy. Yeah. Okay. Before we go there, let's get to here. Okay, we are building a divergence here to the upside. I think we're going to be bouncing shortly here first before we go down. Why? We probably have some shorts here. It's time to go up. And we don't have enough longs here. Before we go down, you got to get longs in here. How you going to make money? Until you bring them in like the sheep and you, as my dad would say, you cut their throat with cotton balls. Yeah. So right now, we have too many shorts here. So most likely, path of least resistance is upside because you want them the shorts to panic and keep buying so you can go up. The buyers are scared to death. They're not going to buy here. It's the shorts that are going to panic and buy. So I think the path of resistance is upside. You're already seeing it in internals a little bit. Okay, you can see a little bit of divergence there. It's a little bit early. Shape is still early, but that's what I'm looking for. What would cause it? I don't know. I don't make the news. I'll tell you what I used to tell CNBC folks. I don't make the news. I'll tell you what I think it should do. You guys go on research and figure out what news would cause that to go. So, could be a number of issues. I have no idea. But all I know is that we're in a little bit of extreme area. A little bit. It is not a launch pad mode when we were here. Look at that. That was a negative 247. That's the original area, early part of launch pad mode. And we've gone a lot below that in value, but not internals. Actually, internals have improved. So that typically tells me this leg is done. We should go back up and then pull down. Okay. Yeah, I don't think I want to be long here per se, or for a long period of time. Okay, quickly. I will get to a level. I'll give you a level there, Ted, but not right now. Give me a second. But think about 3,600 on SPX. Okay. We see the transposition pulling back down. Those of you who were with me, you know how I look at it. There's no signal here. We're sitting at one sigma, kind of neutral, above 200, above 50, above 200. Same is true here on Russell. Russell will hopefully get us a chance to pull up. Yields are going up. Utilities are dropping. Here's your detrender. Okay. Now we're getting a little mixed message. Almost about to go negative on 200. Okay. Still positive on 50. Inverted here. Here's negative. We have one negative now, which is on SPX. It's below 50 and just about 200. That's why it's approaching zero. So don't see a bounce there. Then you're going to test 3,800. And I think 3,600 probably is in the works, which was low of October area. So late September. Okay. Momo is stuck at -7. It's holding. Let me refresh this. Make sure we're good. You know what? Let me make sure this is good too, because of after some time. Yeah. No, it hasn't changed. Okay, good. All right. Not a whole lot of activity here on the 52 weeks high and lows. Forget about that. Okay, sorry. These are backups. And then we're at the -2 sigma on SP1 and sliding down -2 sigma. This is -2 sigma, that line. You can see sliding down. So most probable, this is signaling that we still have a little bit more to go. I think if we can hit it at -10, maybe by tomorrow night, or not tomorrow night, by Friday night, maybe we're flushed it and ready to go up. Near 10, we usually rally. That's just the way it works for Momo. If Momo gets down there to -10, there you go. We do not supply this outside. It's always available in the webinars here. And but you're welcome to attend it. Webinars are open. All right. Now, okay, sigma levels on vols. We want to see how volatility is measuring against itself. This is crucial. Actually, if anything about this had to do with Whaley's comment to me one time about why these levels mean nothing when they talk about, we're at 18, so 18 vol, 18 VIX, so this is going to happen. It means nothing. It's the intensity that matters. So you got to measure it against itself. We were at almost 4 sigma here, and it sold off. And so now we're here around 0.6, kind of fair value, and it's about, nominally is about 21, 20 and a half. Should be a little bit higher on VXN, usually is, plus VXN a little bit more pure measure of volatility, as Dr. Whaley intended, not this new VIX, which is for S&P 500. Old VIX of the same protocols for S&P 100, the OEX. Okay, let's get to SQ because that's what we want to look at. Okay, here's your answer, that the big boys are not betting to the downside. You see how this is dropping? We're at 118. We're way below the first quartile. Okay, so the big boys are not betting on the downside. Yes, we're tricking down on SPX and SPY, but they're not betting a huge drop here. Why? I have no idea. Go and ask them. This is observational. This is computed daily. It's made available after the close. It basically says their tail risk on the downside, the bottom tail risk, the negative tail risk of SPX is very low right now. Usually when we get readings like this, then the problem starts. We don't have like that right now. Maybe it's already been beaten up. I don't know. I'm not in the mind of each player. There are zillions and zillions of people that come in to compute this. Remember, this is the SPX options, not SPY. This is big boys. This is expensive. And they usually want to go a couple hundred S&P points below. But there's nothing there. It's low. So, not saying we can't go down. We will not go down there. Or we cannot go down there. Let me rephrase that. If we go below 3,600 or 3,200 area or 3,400, whatever you want to call it, let me make it easier. If we go below 3,800 to 3,600, okay, something plausible, still a surprise. Because data does not support that right now. There's no signal here that we're heading down there yet. Okay. Now, the big boys may change their mind tomorrow. Then you're going to see a spike there quickly. But we don't have it yet. So my targets now will be probably, I'd say, low of the October lows. What was that low down there? Hold on. Was 3,500? Yeah, 3,500. 3,491, say 3,500. Close enough. Because if you're measuring that far out, 400, 500 handles out, that's 4,000 points on the Dow, approximately. That's close enough. So 3,500, Ted. And that's close enough for government work. Yeah. Okay, rates are going up. Hello. Hello, Murray. Yeah. For those who felt that we were done, I was in that camp myself for part of the summer, going into the low of October. That those days are over. That's why we were long for a good portion of December into January. Then we went short, and the short has been good, and we're neutral now. So our positions are taking about 5 to 6 weeks now on average. Our average hold is about 3 weeks. So we have slowed down a little bit because the shake is too much, and there's a lot of head fakes. So don't trade if you don't have to, because I don't want you to be a victim of that shake. Okay, you gotta have a lot of firepower to survive that, and typically we underestimate that, including yours truly. Okay. So, confessions of a boutique hedge fund manager. Yeah, you make mistakes. I was telling a client yesterday. I said, "I'm sorry, I made a mistake." Well, why did you? So I'm like, "Why don't you do it? Here's the key. You do it." Okay, it happens. Well, you were doing so good. I said, "I know, but that's the past. Past performance does not guarantee your future. If you like, here's the key." Hi, Brett. What's going on? For time frame, no, sir. No, I'm not good at time. I'm good at price. Yeah. Only time I was good on time was the low in here, and that was lucky. This low. I predict not just my target was right of 11,000 on the Dow, but also my time, which was spring equinox. But that was very, very lucky. Usually, I have people who are good with price cycles, good with volatility cycles, or time cycles. Okay, I think I'm best with volatility cycles, but I'm the worst with time. And then in between is the price cycle. So this to me was a luck. Now, why is that? As Gil Caffrey in my book described, the head of hedge fund, big hedge fund called Front Point, and he saw a movie Front Point. I mean, they're like Short, Big Short. Big Short is all about him. It's all about one of his people, Sam Eisen, who was the head of the subprime section at Front Point. Gil is a founder, or co-founder. Well, as Gil said in my book, excellence is repeatability. This was luck. I never repeated that. And it was recorded here. We talked about it right about this area where that bar started. Okay. If you go here, would be, and some of our recordings, you can take a look. But you go back in 2021. It's not going back. It doesn't like me. Why isn't it like me? Yeah. Yeah, we're not going back. I don't know why. Okay, sorry. Maybe it's trying to sync again. So I hate this OneDrive. But anyhow, to me, I'll mark it as a luck, not a skill. No skill. Yeah. So I wouldn't be able to help you. I wish I could. Okay. I wouldn't say we could go there into this spring equinox. Keep in mind though, both fall and spring equinoxes, which is March 21st, September 21st, are because of the alignment of the moon and the earth and the sun, create gravitational forces where we do some crazy stuff. Could technically set up, and they have in the past set up reversals, but I don't know. I think for us to go to 3,400, 3,500 in about 3 weeks or less than 3 weeks, yeah, it's way too much. We'd have a major problem. Major problem. Of course, we have a lot of problems out there. Any one of them could trigger. I don't wish that on anybody. Yeah. For us to go down that fast from here, I think you're in a major problem. And let's hope we don't get into that. But that's where I see. And then, now, if you go slowly, they have more chance. Drip, going down there. It's death by 1,000 cuts. So. Okay. Let's look at our TD and the TD page, which is for Time and Digest. Okay, this is the 3 months spread. By the way, that's one way you can look at it, Brett. Do the 3 months of spread. Now we got to start rolling this because of volume. Okay, what time is it? 5. Okay, yeah. Oh, this is reset. Okay, we're in the edge contract. End of this week. No. End of next week we're gonna roll out of H. So for now, use H long, M short. 3 months long. March short June. If we're gonna go to a low, this baby is going to shoot up, get to near zero, and that's our low. But I don't see it. Actually, matter of fact, upticking a little bit. Okay, so I think I'm afraid it's going to be drip drip. Let's see what we do at 200 day. That's crucial. This is going to bring a lot of people in. We just had a golden cross, okay, which is the reverse of death cross. What we had back there. There was a lot of selling. Let's see people come in. Are they going to buy? And remember, here's our challenge. We're in a 5% market. You can get treasuries. Let's go to treasuries. Here's a 10. Oh, by the way, here's a 10-year. Here's your 10-year. So 10-year will give you 4. You're near 5 almost on a 91 day. What do you call it? 91 day T-bills, which is non-equivalent bond yield like these are. These are YTMs, yield to maturity. You got to compound that 4 times to come up with a yield to maturity of equivalency. So for measurements. But at a 5% market, why would you want to come up? If you're a net saver, think about this. Look at the psychology change. If you're a net saver and you're getting 5%, why do you want to get out of that and go back to stocks? Things you don't know. Remember, folks who are saving up here, age-wise, are different. They're not going to go and chase Snapchat and Tesla, that sort of stuff. They want something safe. And when was the last time they got 5% safe? Think about it. There is going to be a reluctance of people coming back to the market. So the push down is possible. Longer term for a while. Until these yields drop. These yields will drop when the Fed eases up. I don't see Fed easing this year. I just bought 2 bags of groceries at Whole Foods. Okay? It was $168. Something is wrong. And we had a little bit of meat. We had a little bit of meat, but majority was vegetables and that sort of thing, and yogurt and all that. A little chicken for Tico. Think about it. 2 bags, $160. Yeah. There's a lot of inflation out there. I don't care how they measure it. Now remember, don't forget what's called shrinkage. Have you gone out recently to dinner? Have you seen how small your portion is? And your price point went up just as slightly? Guess what? That's not only at the restaurant you were in. That's a wild practice now. It's called shrinkage. So they're not measuring it's my opinion. Again, I'm nobody. Okay? I'm just a poor dumb immigrant. But it's my humble opinion that they're not measuring inflation properly. It's not hitting it's not showing what's hitting our pockets. So for that to go away, it's going to take time. Right? Now, rents are beginning to come down a little bit nationally. If you look at Case-Shiller, you see that. But that's you have 2 things here that are an issue. Gas, obviously, food, housing. 3 issues, I'm saying 3. Now, of course, housing and cars are 2 most pillars of the U.S. economy. So housing, these have to come down a little bit. Otherwise, Fed has no intention of easing up, and you're going to get this front end of the curve keep going up. You can see what we're pointing at. Okay, the R resistance 3. I'm sorry, that's MR3. Monthly resistance 3 is over 5 now. It's almost 5.1. Okay, at this rate with this slope, unless really we get some really good numbers on the downside, on employment, on CPI, PPI, we're going to be printing 5.1 shortly. So, you know, it was only 2 years ago, one big developer down here said, "What the hell do you know about development? I've been doing this 45 years. I said, "Sir, look at the term structure of interest rates." You know what he said? "English, please." I did not continue the conversation. He didn't get what I said. That's what he says in English. If you look at the term structure of interest rates, that's going to tell you what's happening to the economy. I don't care what segment you're talking about. And especially if he's in real estate, which is interest sensitive. So we'll see. But I think we need some easing up anyway. So all right. Today's stuff. March is here. This is 30 minutes. Lowry's up and down volume. We're not making any signals here, guys. No signal. This is all intraday trading, ups and downs, without making any conclusion. Why? We're not getting excessive either way. There's no pressure. There's a lot of you. They're trading dollars. We go up, we'll go down. No reason, no logic. Yeah, we call it Bijan bands or what we call it, Bollinger bands, whatever you want to call them. You get there, we go back and forth, but there's nothing underlying changing. It's great for day traders, awful for investors, and a lot of investors, frankly, are out in the money market funds and some in treasuries. I mean, listen, public.com is saying, come and have a treasury account with us on your phone. Think about that. Okay, the buying pressure power index again of Lowry's. Again, we've talked about this ad nauseum. We post chart, we give you a link, the PDF to read, all work of great fellow Paul Desmond, bless his soul. He passed it a few years ago, but what a mind he was. Anyhow, we are short by this signal, and yes, these are dailies. Short also on mid cap. Notice it's not trading; it's just signaling. Okay, it's not engaged. It's not a green SA strategy automation. Short also mid cap. Long, okay. Long went Russell. Long went NDX. All right, just now, a couple of days ago, from this level at 12.2. So if we can rally back up and continue, fine. Otherwise, you're gonna have another leg down. The bottom line, though, is that's a lot of sausage. It's just grinding, destroying capital. And who would know better than Ted Catherall? He and I have had a number of conversations about when these things happen, you're just crushing so much capital, to the benefit of the brokerage because they get the collective fees, but the capital doesn't go anywhere. Solid, it just keeps going back and forth. So I'm going to stick to day trading. We're going to do a little bit of options, but carefully, a lot less than before. Why? This is not conducive to big bets. You got to be careful. Last week I had a couple of big bets. Didn't work out too well. So now part of it is because maybe I was a little sick. Wasn't paying attention as I should. But we're a different ball game here. So got to be careful. Yeah. Hold on. Why is that responding here? Okay. Shoot. Hold on. I'm trying to get to. No, I don't want to do a tweet deck. Oh, here. Sorry. I'm going to go here. Okay. So now this is our. Will we go in there? This is our. Let's see. We've gone too far. Yeah, that's why this looks different. Okay, there we go. Okay, this is the 200. This is the percentage of the stocks above 200-day moving average, and we're sitting at 56%. Super uber neutral. Again, as you've heard me say many, many times, and this is today. Yes, March 1st. Right. And this is a quote. Yeah. 45 to 55 means nothing. It's a core area. It's going to vacillate. You're as good as using a coin for this. Okay, so coin toss. So no signal here. We've dramatically have come down in our scoring number for number of 200-day moving average. So I can't use that as a signal either. So all things being equal, rough calls ahead. A little bit of gambling is involved now, so be careful. Try to avoid it if you can. That's my spiel. Why don't we open to more questions? Ted, glad to see you here. Any questions for me, guys? Okay. No questions for me, guys? All right. We're gonna close the meeting here. We'll try, Richard. Appreciate that. Thanks, Ted. No major revelations this week. We don't have any. Cannot build something the chart's not there. But glad you were here. We're gonna finish the webinar here. Get post processed, and as always, post it right here. Go to our YouTube channel. We post it there shortly. Okay. Thank you all. See you next week. again at 4:30 on Wednesday. And we'll always also post our timeline of what we do other members without logging in. You can see it up above. So this date will change to the 8th. Okay. We're still looking at Marshall Fried on April 11th. I'm going to be a few days after that. I'm going to be in San Francisco for a family gathering. But he's going to be doing this on 11. We think this month he's in Antarctica. It's Marshall. I can't expect. He's Marshall. He just, he's very well to do. He's done very well. He's very smart. He wants to travel. And so he's in Antarctica. I think he left this morning or last night, whatever. So that's the best date we have out of him. We have rescheduled it 2 or 3 times. I apologize, but good people are busy. And last thing you need to do is piss them off. All right, gentlemen. Thank you all. Thanks, Dave. Thanks, Greg. Thanks, Dennis, as always. Appreciate that. Just try to tell it, Dennis, the way I see it. No sugarcoating. Markets are tough. Be extra careful. Better days will come. It never stays like this, but we're in a very, very unusual environment, okay, because of the interest rates. We've never had a 5% market, so in a long, long time. And back then, where everybody went to the stocks and you would buy the dips and things were easy, that's because the net savers had no option but get involved with the youngsters and gamble. Now they just park it in treasuries. So different ballgame. Yeah. Now, of course, those who bought treasuries about a year ago, they got problems. This rates went up, and you know what happens with your face value. If you held on to it to maturity, nothing happens to you. But if somebody talked you into buying the 30-year, most likely, if you're near retirement, you're not going to hold on. You're not going to be around for a full 30 years. None of us are going to be. So you're going to cash it in prematurely or before maturity, and then you got to go with current market, and the current market will give you a haircut. So, I like to be both. A little bit of this, a little bit of that, a little bit of stocks, a little bit of bonds. But we'll see. My sister, different story. She's all in bonds. She does not believe in stocks. So, I mean, one time I put her in what do you call it? Netflix. You heard what happened. She drove me nuts. So, no more investing for the sister. Yeah, she doesn't understand it. You're wrong when you take a $47 stock, write it to 266, and then it goes to 300. So you must be a dummy. And her argument was, why couldn't you see it's going to go to 300? I didn't talk to her for 6 months. Told the staff, don't answer her calls. Anyhow, we'll talk soon. All the best.